Today, cryptocurrencies rebound after a multi-day sell-off. Bored Ape Yacht Club warns Discord members not to mint NFTs. And Wall Street's going in on crypto, but maybe not fast enough to keep its top talent. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital currencies are on the rise after the recent sell-off. The market as a whole gained 1.5% by noon Eastern, and Bitcoin gained a modest 0.1%. Ether prices, meanwhile, jumped 3.6%, and Ripple's XRP gained just under 2%. Now for some of the headlines. The Bored Ape Yacht Club is warning users of a hack on Discord. The company behind the popular and expensive NFTs tweeted that a component of its Discord server had been compromised. They said they immediately fixed the issue, but still warned members not to mint anything on the platform in the meantime. Next, Citi thinks the metaverse economy could skyrocket to $13 trillion by the end of the decade. The research aligns with what a lot of guests have said on Crypto World. The future of the internet is Web3 and the metaverse. In total, Citi expects around 5 billion users interacting in the digital economy by 2030. Finally, U.S. lawmakers are introducing yet another bill meant to rein in crypto. Two House Republicans introduced the Stablecoin Transparency Act. The proposal would require these coins to be backed by a combination of U.S. dollars and government securities. Stablecoins have already faced particular scrutiny from U.S. lawmakers who fear the digital assets lack oversight. All right, now for our main story. I'm here in downtown Manhattan, right around the corner from Wall Street, to talk to some of the biggest banks as they build out their crypto teams. Data from LinkedIn shows crypto hiring at financial firms has quadrupled since 2015, and banks like JP Morgan and Goldman Sachs are now competing with startups for top talent. I spoke to Omar Farouk. He's CEO of JP Morgan's Onyx crypto unit, and he says that banks have to move slower, but the impact, in his words, is something a fintech could only dream of.
There aren't many places where you can roll out a new platform to do, say, trading, repo trading for securities versus cash, and that platform can go from literally nothing to moving or transacting $1 billion of trade a day in a few months. So I think that sort of scale can only be possible when you operate at a company like JP Morgan Chase.
The slower speed of big banks has frustrated some employees, though. Take Justin Schmidt, former head of digital asset markets at Goldman Sachs. He's now head of strategy at Talos. He says he learned a lot from being what he called a cog in the bigger machine at a bank. And while, yes, he was walking away from a big Wall Street salary and bonus, he says there's also career risk of not moving quickly enough.
Risk is a sort of multidimensional thing. So inherently, you're taking brand risk, right? Goldman is one of the storied institutions of Wall Street. And I think you also take a risk by staying at some place that is more traditional because, and I very firmly believe this is a generational change, and there's a generational opportunity here in what's happening, both from an infrastructure perspective, from new assets that are being created, and even how all these things interact.
I also sat down with Mary Catherine Latter. She left her role as a managing director at BlackRock to join Uniswap, where she's now chief operating officer. I spoke to her about that decision and why she also thought that it was a bigger risk to stay in traditional finance than to head to a crypto startup. I want to talk about your career path and your start on Wall Street. Walk us through, your decision to move from a career on Wall Street to a crypto startup.
Well, I got into finance because I was passionate about helping people access markets. And so I worked at Goldman Sachs investing in clean technology. I worked at BlackRock digitizing retail investing. And in about 2011, I became passionate about crypto and its promise to open up markets that much more. But it was really early days, and the technology was in a foundational stage. And so for someone who was a business person, not an engineer, there wasn't a lot to do yet. So it really took until last year when I realized so many crypto companies, so many Web3 companies are expanding, are reaching more users, and really need to now bridge to meet Wall Street and to bring, whether it's real world assets, other asset classes onto the blockchain, or whole new users into this world of Web3. And I believe passionately it's the future, and Uniswap is a big part of that.
And so when you were at BlackRock, walk me through your sort of interest in crypto. Were you working on it in a professional capacity, or was this sort of a side gig?
I was. So my second week at BlackRock in 2015, Larry Fink was asked what he thought of blockchain. And I thought he could add a couple other things to his answer. And so I wrote a little memo about what the BlackRock could do in blockchain. And to the firm's great credit, they then invited me to lead a working group. And so we did a handful of proofs of concept. We partnered with a number of companies. And so we were experimenting in blockchain and crypto in 2015 in pretty early days. That was a chapter of private blockchains, enterprise blockchain, and then we had this trough of disillusionment where nothing really happened. So we were doing things, but it certainly wasn't my primary job. It was kind of a hobby, as it is for so many people on Wall Street, and it definitely wasn't something that at the time I was thinking about doing full time, just because it was such early stages of adoption.
Why would somebody want to stay at BlackRock to try to work on a crypto project?
Well, I was always compelled by the opportunity to have a huge impact at a place that already does, and to transform an organization in some small way that already reaches millions and millions of people and trillions of dollars. But today, so many Web3 companies are extremely well funded, are attracting the best talent, and so we reached a point where I realized I could have as great an impact, and it was certainly a different one if I were in the space directly.
And so talk about that process, the idea of sort of making the leap and jumping into a crypto startup. Is it something that I'm sure that was a big decision, especially when you're leaving Wall Street? You're also leaving a pretty stable career. You're leaving a lot of money on the table. What did it feel like to go and take that bigger risk to go to a startup?
Understanding Web3 and blockchains today, I think, is so critical to the future of finance that it didn't feel like a risk at all. I felt that the network I would build, the people I would work with, the ideas I could contribute to and help make real were so important that I really, honestly, I was sad to leave the people I had loved working with for many years. I have tremendous respect for the firm, but it didn't feel like a risk. I think that that's a great thing about where we are in Web3, is that there's such support, frankly, for this phase of innovation and experimentation.
And did it feel like a bigger risk staying in some ways? I've talked to people who've said, things move slowly, this industry moves so slowly. What's your take on, the risk of staying in one place and maybe missing the boat when it comes to crypto or Web3? It's
such a personal decision, but I do think that it's imperative that the largest financial institutions start to really understand and get their hands dirty in this technology. It's really critical that they understand how transformative and disruptive crypto can be and Web3 can be for all of financial markets.
Got it. Well, tell us about the hiring process too. I'm sure have you heard from a decent amount of people looking to make a similar move, either reaching out to work at Uniswap or looking for guidance on maybe making the same career move from Wall Street to crypto?
Well, one of the most exciting things about working in Web3 is the breadth of people who are interested in it. And so many people who frankly had no interest in financial services, who would never really explore or consider working on Wall Street, are excited to work at Uniswap Labs and companies like us. So that's exciting because I constantly am meeting people who are 23 years old, who are as smart about markets as people I worked with on Wall Street for years, and it's a totally new interest for them. And so that's, I think, a huge opportunity. Certainly there's people coming from Wall Street, and a lot of that relationship background, a lot of that knowledge as to what's worked and why is really important, but this is appealing to a much, much, much broader audience.
And where are some of those younger people getting that education? Are they self-taught? How are you finding some of the young crypto talent becoming as smart as, like you mentioned, some of your peers on Wall Street?
So the founder of Uniswap, Hayden Adams, is a great example. He studied mechanical engineering, and he's a self-taught developer, and he's self-taught in markets. And he invented this thing, the Uniswap protocol, that is revolutionizing how people create markets on the internet. And some of our best developers are all self-taught as well. So I think that's one of the things I love most about crypto, is that people don't look at your resume in the same way. The code that you've developed that's open source, that's available on GitHub, is a better advertisement of what you're capable of than where you went to college.
So you don't need an MBA in this case?
As someone who has an MBA, you definitely do not need an MBA.
In terms of the competition for jobs, you've got Wall Street, some of the smartest people who probably do have MBAs like yourself, then the smartest people in tech. I wonder how that intersects and how you think about the competition for the top jobs at a place like Uniswap.
There's no question that it's competitive not just to get jobs in these companies, but for us in competing for the best talent. There's so many companies really doing exciting things that are well-funded and are all competing for the same people. So what's critical is that people understand what you're trying to solve and the mission of the company. We talk to everyone about the values that got them into crypto. Do they care about putting people first, making sure that technology is actually having an impact on people's lives? Do they care about building to last? We don't think there's any shortcuts to reinventing the financial system. And when you build smart contracts, they're effectively permanent. And so it's really important that you have that attitude as opposed to move fast and break things attitude. And then are they collaborative? It's an open source community for the most part. And so it's critical that you don't just collaborate in a traditional sense with your colleagues, but that you're comfortable working with people outside the walls of your company.
And before we go, Marcus Satiro of Global Block is keeping an eye on Bitcoin as a petro asset.
We've seen recently even, one of the largest gas and oil companies in the world, Exxon, implement a Bitcoin gas to mining system where they're using excess gas to actually use that energy to actually mine Bitcoin. So that will remove 18 million cubic feet of gas per month that would otherwise be, just polluted into the atmosphere. So these gas and oil companies are really sort of solidifying this, institutional backing for, creating environmentally friendly solutions for Bitcoin.
And that's it for Crypto World this week. We'll be back here on Monday with a lot more. We'll see you then.